I stand before you not only as a speaker. I speak to you as a father, a former small business owner, and a taxpayer. And like many of you, I worry about a future that feels less secure than it should. A lot has changed in recent years. Our southern border was once secure. Now the number of illegal immigrants who cross our border in just 2 years easily exceeds the population of 25 states. Americans are getting hammered by high prices. Today, nearly 2/3 of all Americans are living paycheck to paycheck, struggling to make ends meet. Meanwhile, China is infiltrating our culture, our farmland, and our skies because they see us as weak. This is not sustainable. But of all the dangers we face, the greatest threat to our future is our national debt. You deserve the truth. So let's start with the facts. Our national debt is high, too high, and the problem is getting worse, not better. We are now $31 trillion in debt. That is more than the size of the entire American economy, 20% more. Our debt is now a greater burden than it has been at any time since World War II. If we continue down this path, in the next 10 years, we will spend over $8 trillion just on interest. That's more than the entire federal budget this year by a lot. That is neither affordable nor sustainable. When debt is too high, inflation is the result. That is where we are today. Inflation has exploded. Mortgage rates have doubled. Working Americans, after inflation and taxes, have...
Good afternoon, friends. I have breaking news to share with you this Monday. Treasury Secretary Janet Yellen has just made a big announcement. Inflation is finally beginning to ease. Yellen and other economists have confirmed that the American people should expect to save more money this year. President Biden is set to unveil a new inflation relief plan. My friends, please do me a big favor and watch until the end of this video to hear about all of the details. Also, I will be giving away 2 $75 Walmart gift cards this coming Friday. To say thank you so much, friends, for being part of this community and for joining me here every day. If you'd like to enter the weekly giveaways, please make sure that you are subscribed to my channel, click and like several of my videos, and then comment below the keyword of each video that you watch. My friends, the more videos that you comment on, the greater your chances of winning the weekly giveaways. But as interest rates go up, 2023 is shaping up to be a very good time for savers who stand to earn more money on their cash. The Federal Reserve last week added a 0.25 percentage point rate increase in the latest in a string of rate hikes to try and combat record high inflation. As the unemployment rate hit a 53-year low in the latest jobs report, the interest rate increases are expected to keep coming. The next increase may come in March. As high prices subside, the after-inflation return on cash is poised to get a lot better this year than it has been for savers in the past few years. However, though inflation may be starting to ease, drivers will not see a break on their insurance this year, with the average cost of a policy rising almost 14%. According to a new analysis, the price of full coverage car insurance jumped to $2,014 a year in January. That is up 13.7% from 1 year earlier. A Bankrate study showed that drivers in some U.S. cities are paying about $3,000 this year for coverage alone. The higher insurance costs come as car buyers are facing higher interest rates on auto loans, while vehicle prices have also inched higher. The typical monthly payment for a new vehicle is now $717. That is 37% higher than 5 years ago. Also, the bank rate study examined the nation's 25 largest cities to determine where drivers pay the most in car insurance as a share of their annual income. It found that motorists in the cities of Boston and Seattle pay the least, at around 1.3% and 1.4%. Drivers in the cities of Miami and Tampa, Florida, face the steepest car insurance costs at 5.5% of their earnings. One reason car insurance in Florida is relatively higher is that drivers are required to buy no-fault insurance. Auto insurers charge more for those policies because they view no-fault as more risky, since they must pay for a claim no matter who caused the car damage. Some of the cheapest full coverage prices are in the city of Boston, which stands at $1,328, Portland at $1,458, and then Charlotte at $1,484. Insurance rates could climb even higher, depending on how inflation impacts the economy. One economist told CBS News, "Car insurance is a really important part of your financial health. If you know your rate is going to be higher, even if nothing changes in your coverage, you can prepare your budget for that a little bit better." U.S. Treasury Secretary Janet Yellen announced today that she has a new path for avoiding a United States recession, with inflation coming down significantly and the economy remaining very strong, given the strength of the U.S. labor market. Janet Yellen just told ABC News, "You don't have a recession when you have 500,000 jobs and the lowest unemployment rate in more than 50 years. What I see is a path in which inflation is declining significantly and the economy is remaining strong." Yellen also stated that inflation remained too high, but it had been falling for the past 6 months and could decline significantly, given measures adopted by the Biden administration, including steps to reduce the cost of gasoline and prescriptions. The U.S. Labor Department data released Friday showed job growth accelerated sharply in January, with non-farm payrolls up by 517,000 jobs, and the unemployment rate dropping to a 53-year low of 3.4%. The strength in hiring, which occurred despite layoffs in the technology sector, reduced market expectations that the U.S. Fed Reserve was close to pausing its monetary policy tightening cycle. Yellen told ABC News that reducing inflation remained Biden's top priority, but the U.S. economy was proving strong and resilient. She also called on Congress to raise a U.S. debt limit, warning that failure to do so would produce an economic and financial catastrophe. Yellen stated, "While sometimes we've gone up to the wire, it's something that Congress has always recognized as their responsibility and needs to do again." Republican U.S. House of Representatives Speaker Kevin McCarthy and President Biden met last week for talks on raising the debt limit and have agreed to meet once again. But the standoff has unsettled markets. So, dear friends, what are your thoughts about the current state of our economy? Please let me know your thoughts in the comment section below. Well, my magnificent and most marvelous friends, that is the end of my daily stimulus update video for this afternoon. My friends, I want to say thank you so much for joining me here every day and for being part of this community. I greatly appreciate all of you. To say thank you, friends, I will be announcing 2 winners this coming Friday for a Walmart gift card giveaway. If you'd like to enter the giveaway, all you have to do, my friends, is click and like several of my videos, and then comment below the keyword of each video that you watch. Friends, the more videos that you comment on, the greater your chances of winning the weekly giveaways. Thank you, and have a very wonderful and very blessed week.